who died, $8 million fortune. So don't tell him, I don't want anyone to say, oh, Clifton, you know what? I'm close to retirement age. I can't do that. Mr. Reed was 70 when he started. 70. And died at 92 and left an $8 million fortune. You can do this literally all your life. Because I tell people this. I say, you know, when I think about it, I think about all the money I waste on frivolous things. That I could like, wow, man, if I only invested that money, boy, I'd be rich today. And that you would hit a lot of what if. Let's stop that and let's start doing. That's the key. Think about it. You start building a financial legacy right now, and then you teach your children to do it. And they teach their children. Before you know it, they'll say, hey man, them African American people, boy, I tell you, I want to be just like them. You know? I'm serious. You know, that's what they say about the Jewish people. Oh, they know money. I mean, that's stereotype. Oh, every Jew, oh, they know money, man. They know that. You know, the Jewish people, you know. They didn't say that about us. Because all the Jewish people do, they plan and they work together and they encourage each other. And that's all I'm trying to get you guys to do. This is something that anybody can do. You don't have to be a Jew or a Greek. All you got to do is say, hey, look, you know what? I want a better financial future, not only for myself, for my children, for their children, and I want to pass something on. I want to pass on a financial legacy. Solomon, Proverbs 13:22. I want to pass something on. You know, one of the reputation about our people is that when we die, we only leave bills and headaches for our kids. We can change that. We don't have, it doesn't have to be that way. We can change that by basically taking command right now and say, you know what? I want to be in control of my financial future. Banks are not going to provide the answers. Insurance companies are not going to provide it. If you love a bank so much, all right, here's my suggestion. Buy the stock. Buy the stock. You love Bank of America, you got to keep your money in Bank of America, buy the stock. Because Bank of America, believe it or not, is a solid company. Let me see if I have it. No, I don't. All right. But Bank of America, do you know Bank of America has a net book value of $24 a share or higher, I believe? Current market value of roughly about $16, $17. There's a risk-free premium in there of about $6 to $8. There is no risk there. If the company went belly up today, too big to fail, guess what? And you invest in Bank of America, you would not get paid at the current market price. You would get paid at the book value, which is pretty high. That's why I say drip investing is value investing. Because one of the things that we do is we go through, like AGNC, and we find out what the book value is. And here's something, folks, that I worked out today. There's something called the risk-free premium ratio. Okay, let me tell you how you get that. This is how you can quickly determine whether you should invest in a stock. You look at the book value of the stock, okay, in this case, 2303, and you look at the market value. You look at all the other factors. Beta is the risk factor associated with a particular stock. The beta is the risk factor in relation to the rest of the stock market. The overall market risk factor is 1.0. So if the beta of a stock is, let's say in this case of AGNC, it is 0.40, that means that AGNC carries less risk than the market itself. Okay? You need to know that if you're going to invest your money in these companies. But here's something else I came up with that will quickly allow you to determine whether you should put money in a company. I take the net book value, which is 2303, and I divide it by the current market price, which is 17.73. For AGNC, it is 1.30 times. Okay? If you guys don't have it, you can take a look at it. Now, let me tell you what that means. It means that your money, your investment, has a safety net of 1.30 times. You're not going to lose any money. All right? Now, if you invest in AGNC today and it goes down by $1, you panic and you sell, of course you're going to lose money. We are not day traders. I want to train you guys to be value traders. You know the greatest value trader of all time, you know what his name is? Anybody? The greatest value trader of all time. Warren Buffett. Warren Buffett is the greatest value trader. Warren Buffett does not invest in anything where he believes he won't make a dime, a buck. He's the greatest of all time. And he looks at these things. And you know what he does? He says he'll never invest in anything that he doesn't understand. He doesn't invest in technology stocks. Now, as great a relationship as Warren Buffett has with Bill Gates, do you know Warren Buffett doesn't own any of Microsoft stock? Ain't that something? He's going to give all his billions to the Gates Foundation to dish it out, but he won't invest in the stock because he doesn't understand the technology. Invest in what you know. That's what Warren Buffett does. And we can do the same thing. This little thing I designed will allow you to quickly determine the stocks that you need to invest in. 1.30 times safety net, that says consider that. I'm not saying invest in it, consider it seriously. Now, if you look at the sheet I passed around, Domino's Pizza. I push Domino's, but they are very risky. It has a negative risk-free premium. You know what that's telling you? You're taking an awful lot of risk. If the company goes belly up, guess what? You get nothing. All right? Companies like that, these are growth companies. The reason why I invest in Domino's Pizza, I can afford to do it, number one. But number two, I love the CEO. He turned the company around. Okay? Patrick Doyle. This company has a lot of stocks and a lot of products in the pipeline. Plus, I could not get away from the fact that they had 22 consecutive quarters of profits. I love that. That's money to me. I know the risk is there, but I'm willing to take it. All right? That's the only risk asset that I have that really, there's no value there. But I'm just fascinated with the guy, and I know that he's going to turn the company around. All right?
What about Weight Watchers?
Oh, do not put your money in Weight Watchers, folks. I'm telling you. I don't care what Oprah Winfrey does. Do not put your money in Weight Watchers. And if you don't believe me, listen to this. Here's something you can really do. Go to www.yahoo.com. Go to the finance section, okay? And click on key statistics. And what that will tell you is the net book value of Weight Watchers. It's a negative number. It's a negative number. The ride that they're experiencing right now is because of Oprah Winfrey. I would not put my money in Weight Watchers.
She put $43 in it.
I don't care. She can afford to lose it. Can you afford to lose $43 million? No. Don't put your money in Weight Watchers. It is too risky. Again, we're going to focus on value investing. We're looking at companies that offer a tremendous value, that has a positive net book value greater than the current market value. And let me tell you something, folks. If you can find those companies today, as I did with AGNC, don't worry about the current market price. Do you know what VectorVest said? Look at your outline. Let me point this out to you. VectorVest said that the net book value, focus that. Let me direct you to this. The net book value of AGNC, let's take a look at it. Let's flip through it real fast. This is the VectorVest analysis. They did it. I didn't do it. All right. They said the net book value, I'm sorry, the market value should be about $30 and something cents. It's here somewhere. Trust me. I'm getting old. Going blind, but I can find it. I know it's here. I saw it.
It's at the bottom.
It's at the bottom? Okay.
Yeah.
All right. Now.
The last paragraph on the capital appreciation.
Okay. Right there?
Yeah, it says AG&C has a current value of $30.
Okay.
37 cents.
And that's not me talking. That's their assessment. Okay? Now, what they're saying is that this stock should not be trading where it's trading. Okay? And let me tell you why. I agree with that. Generally around this time, from November to April, the stock market goes in what is called a bull run. All right? It goes in a bull run. REITs are traditionally safe havens because of the dividend yields. People will say, okay, if the market is going to fluctuate, is there going to be a lot of volatility in the market? I'm just going to put my money in a REIT because at least I know I'm going to get a good dividend. All right? Now, guess what? Because the growth stocks are moving so high the high beta stocks, meaning the high risk stocks, are moving so high, people are doing what? Putting their money in those stocks. And they're abandoning these REITs. All right? That's what they're doing. That's why usually around May, June, you will see the reverse. Companies like AGNC, the market price will start to move up. Because now the investors are doing what? They are chasing for the yield, for the dividend yield. All right? So you got to be aware of those things. Vector Vest is saying that the market value today should be about $30 and something cents. I'm not saying that. They're saying, I did the analysis. I ran it on them. They said that's what it should be worth. Now, when investors find that out, guess what they're going to do? They're going to flock to that stock and try to buy it up. And guess what's going to happen? It's going to push the price up. All right? Let me tell you how markets work, guys. What is the market? A lot of people think the market is this big, mysterious thing that nobody can figure out. No, it's not. It's you and me and all the other retail investors and the big institutional investors, the banks, the insurance companies. That is the market. And guess what happens? Every day, markets do what? They go up and down, depending upon what? The number of sellers and buyers. If you have more buyers than sellers, what's going to happen? The stock price is going to go up because the demand is greater for the product, right? If you have more sellers, people all of a sudden, they got this idea, oh, you know what? Bank of America is going to go down, or they got bad earnings, or some analyst said something bad about it. Guess what's going to happen? They're going to start dumping this, and it's going to drive the price down because no one wants it. That's how markets function. That's normal. If you don't understand the dynamics of a market, guess what you will do every time you see something going on? You will panic and sell at the same time. Market dropped 250 points a day. Kyle will tell you, I'm sitting there, oh, okay, cool. Let me go bargain hunting. I'm looking for some bargains now. And what I do is the same thing. I evaluate each of my investments before I put my money down. All right? I look at this company, this stock symbol is Cobalt International, CIE, I think. One time it was trading in the high 80s. It's down to $8. I was looking at it. Poor management, poor results. I'm not going to put my money in that. So you know what? I said, the stock is cheap, and I know it's way up there, but I'm not going to put my money in it. So I just, it's gone. And that's what we do. We evaluate everything. We look for value before we plop our money down. And again, like I said, you don't need a stockbroker. Why should you have to pay a ton of money to someone to tell you, put your money in this stock, and then you still lose money? Does it make sense? You can do that yourself. Just like you learned how to read and write, you can learn how to pick stocks. It's not hard. It's real simple. I tell people, you know what? Clifton Rodriguez will never get burned by anybody when it comes to my money. You know why? I don't let anyone touch my money. When it comes to investing, I want to be in control. Bernie Madoff would have never gotten my money. I guarantee it. Because I've never used a stockbroker. I said, you know what? If you can do it, I can do it. I got a brain. God gave me great matter too. I can do it. People call me, Kyle will tell you all the time, Mr. Rodriguez, we'd like to establish a relationship with you, sir. Why don't you trust us with $5,000? I say, yeah, like I'm stupid? That I can eat a hole in my head? Why am I going to give other people my money to invest? And let me tell you something, folks. I'm talking to you, but you see these hands right here? Look at them. Otis Redding had a song. These eyes are mine. Was it Otis Redding? I said, these hands of mine will never touch your money. There's no need for me to touch your money. You can go directly to these public corporations and invest your money. All I do is educate you and show you how to do it. Like I said, if any of you guys want to set an account up, you said, Mr. Rodriguez, can you sit with me and show me how to do it? Yeah, I will do that. I charge you for my time, but I will do it. All right? I will show you how to do it. You don't need a broker to take your money and do anything. I have 18 of these things that I'm using. And I built them from 4 to 18. I got 2 more to add. I want to add Boeing, it's number 1, and I want to add Microsoft. Those are the last. I have 20. That's it. That's all I need. And I'm just going to let it automatically invest. And I said, I'm telling you right now, in 10 years, you're looking at a millionaire. I projected it out. I will have 6.5 million in my portfolio. And right what I'm doing right now, I'm going to do my CPA practice and just invest my money. If the good Lord allows me to live that long, I will be a multi-millionaire.
So 2025 just said it's going to crash.
Listen.
Why
Listen to me. Okay, I'm glad she brought that up. And that's why we're having these meetings tonight. She's right. By the year 2025, which is 10 years from now, we're going to have a serious fiscal crisis looming. And it will take effect starting in 2025. You know why? The back-end baby boomers. People who were born from 1960 to 64. We call them the back-end baby boomers. They are going to retire in droves. And the Social Security system will not be able to provide benefits to those people. Now, let me say this, folks. If you think that Social Security was designed to provide 100% of your retirement benefits, you're wrong. It was only designed to provide 15% of your retirement benefits. Who's responsible for the remaining 85%? You are. You think the government is stupid? Why do you think that they have all of these deferred tax savings plans and encourage you to do things? Because there's a need. I was listening to Stanley Druckenmiller. Those of you who don't know Stanley Druckenmiller, one of the premier money managers on Wall Street. You know what Stanley Druckenmiller said? I'm sick and tired of people passing around this number. $19 trillion is what the United States government owes. That's not even close, folks. Druckenmiller said if they included the off-balance sheet items, all the money that the politicians that they owe rather to the trust fund, guess what the national debt of the United States is? $214 trillion. Okay? Our government has become addicted to debt. All right? You can start right now, just make this assumption. They're going to disqualify you from getting Social Security benefits. You can now start doing something about it. 10 years is not a long time out there. I will be 65 in 10 years. Some of you probably along with me or older. 10 years, you start with just $50 a month, $600 a year for 10 years. Look at the next thing you will have. You won't even need Social Security. You won't even need it. The key is preparation. If you don't plan, guess what? You're going to fail. You cannot sit and hope that the government is going to be there to bail you out. This is an easy, and guess what, folks? You notice I haven't said anything about the IRS? well, let me tell you why. Let me tell you why. The money that you're going to be investing will be with after-tax dollars. Wow. There are no IRS issues here. You're going to take the money, after-tax dollars, and invest that money accordingly. And nothing to do with the IRS. Now, you're going to pay your dividends. When you get your dividends, you'll pay them, and you'll declare them on your tax return. That's fine. All right? And a lot of people say, well, Mr. Rodriguez, why don't you do a Roth? Tell them about a Roth IRA. I don't want to make it complex for you, having to deal with the IRS. The IRS got enough on its plate. Especially now Obama put this Obamacare thing, and guess what, folks? That's going to hit this year in 2016. And if you don't have it, and they warn you, you'll hit with a penalty. $695. Exactly. And it's going to go higher and higher as the years go on. So if you don't have Obamacare, be aware of that. The government has too much on its plate. In addition, it has this huge debt. You know the Social Security Trust Fund is owed close to $2.5 trillion? If they just left the money there and allow it to grow and what have you, guess what? It'll be a problem. But you know how politicians are. They like to take your money and do what they want to do. Right? George Bush. Oh, let's go and get rid of Saddam. Why don't you use your money, Mr. Bush? No, can't do that. Taxpayer. Ill-gotten rebates. All of these things will have an impact on the situation. Now, why do you think the Federal Reserve, they're doing what they have to do? Because poor fiscal policies of the United States. The poor people, Janet Yellen, the poor lady, I feel sorry for her. She has to do everything to manipulate things, to keep things going, keep the investors happy, keep the government happy. The Congress is sitting back on their hands. We're not doing anything until Obama goes. You know? So, but that's good, folks. You know what? If they're sitting on their hands, they're not going to bother you. So now's the time for you to start doing something to help yourself and help your family and friends and help each other. You know? And this is something that you can do. Now, let me say this to you. I believe 100% in investing in stocks because I believe that the stock market makes more millionaires than any other investment vehicle, including real estate. And if you don't believe me, there's a fella by the name of Kevin O'Leary He's on Shark Tank. You probably guys heard of him. I want you to go to YouTube and look at his video. I have it. I should say this. On my Facebook page, Clifton H. Rodriguez, and you go to the PM Club, you will see the video right there. Mr. O'Leary said, people who invest in real estate are suckers. Let me tell you why they're suckers. You're taking all the risks. There are so many risks you take. Why do you want to invest in real estate? You easily put your money in a real estate investment trust. Every month, I cash flow $325. I don't have to pay any real estate taxes, no insurance. I don't have to deal with tenants who don't want to pay their rent. Right? And I'm getting what? About $6,000, $7,000 cash. Cash. Do whatever I want to do with it. And every month it repeats itself. Don't invest in real estate. Look at the real estate investment trust. There are a bunch of them, and they're relatively safe. They're relatively safe. Now, the reason why I said it because a lot of people think, well, you put your money in real estate, Mr. Rodriguez, and you got your money back. No. You don't pay those property taxes 3 years, guess what? Tax lien. That's gone. You figure that? That's not safety. That's too much risk for me. I've never invested in real estate. Unless it's commercial and I know for a fact I can make some money. But seriously, it's too risky. Why do people do that? You deal with tenants who don't want to pay the rent, they skip out on you, they mess your place up. Why? When you can just sit back and relax, and every 8th or 9th of the month, I see these huge dividend checks coming in, and oh, I feel so good. Come on. And Kevin O'Leary, believe it or not, folks, is a billionaire. You know what his mother told him? Never invest in anything unless it pays a dividend. If you go to my page and you click on it, you'll hear him say that. His mother told him that. And that's why he's a billionaire today. You know? So, but let me wrap this up by talking about AGNC. VectorVest said that it is a steal. I think you guys need to consider this as probably one of the first stocks in your drip portfolio. Okay? I've done my own personal analysis on it. This company generates a lot of cash. Do you know what they invest in, anybody? They invest in guaranteed government-backed mortgages. Guaranteed government-backed mortgages. This is a solid company. And they're not doing something that way out in space where you say, oh, I put my money in there, I'm gonna lose it. Guaranteed government-backed mortgages. That's what they invest in. And they are huge. The capitalization on this company, I think, is close to 28 billion, I believe. Maybe it's 8 billion. I'm not sure. I think it's about 8 billion. You know, that is a huge, huge company. All right? I don't know if you guys can appreciate $1 billion, but let me give you some perspectives on it. You know, 1 billion seconds ago, Christ was on this earth. You didn't know that? 1 billion seconds ago. That's how much $1 billion is. It's a lot. All right? And if a company is 8 billion solid, all right, that's a good company. Now, if you got in this company today, $17.85 is what you'll get in at. That's the current market price. When you invest in any stock, whether you go through ComputerShare or Wells Fargo or what have you, ComputerShare is the largest transfer agent. You invest at the current market price. Okay? I often tell people, if you see the prices of the stock is going up and you're anxious to invest, don't. I say, well, why, Mr. Rodriguez? Everyone's making money on it. Don't. Don't invest when the stock price is going up. Wait until there's a pullback. When the price drops and you think, oh, you know what, that's dropped, look, then you put your money in. That's right. Okay? Now, with value investors, which we are, we don't have to worry about that. You know why? Once you set everything up every month, all right, when the price is up, your money buys less. But when it drops, it buys more. So automatically, you're already tuned in if you become a drip investor. That's right. You don't have to worry about that. Okay? But get this, folks. You're going to be impressed with this. This company has a net book value of $23.03. So there's a risk-free, in my analysis, I said your money is safe by what? 1.30 times. Okay? Your money is safe by 1.30. That's a risk-free ratio. Okay? They invest in guaranteed government securities. So they don't do anything risky. Okay? You can get in AGNC tomorrow by simply going to the computer share, www.computershare. You'll see the screen will come up. You'll see the man feeding the piggy bank in the hand. You click on that. As easy as that. Put your name in there. Boom. You have your banking data right there. What bank you want to use, where the money's going to come from. You can do a one-time, non-recurring investment. Boom. It takes you 5 minutes at the most to do it. Now, I do it for a lot of my clients because it's kind of hard for them to navigate through, so I will sit with them and do it. But like I said, I charge a fee for that because it takes up my time. And I'll set it up for them. Once I show you how to do it, then you can go back in and add additional companies. You want to buy Coca-Cola? You can add Coca-Cola. You want to buy ExxonMobil? You can add ExxonMobil. You can add almost up to 6,000, I believe, companies. And you will see exactly what you need to do to get into those companies. And it's not hard. $250 down, $50 a month. This is by far the safest way to invest. Now, if I was telling you guys, go take $20,000 out of your IRA and put it in there, y'all say, y'all, you crazy, dude. I ain't doing that. $250 down, $50 a month. That's $300 to start. Automatic, $50 a month investment. Anybody can do that. All right? I have a friend of mine whom I went to college with. He lives in St. Charles, Louisiana. His name is Jim. He's Greek. He's a funny guy. I've been talking with this guy for 2 years. All right? This guy has about $20,000 in a passbook savings. All right? In Bank of America. So I said, Jim, listen, man. Because we share information. I said, I just got paid this dividend check. Oh, Clifton, that's great. He said, last year I got paid $257. I said, dude, what are you talking about? I get paid that every month. All right? I said, take $5,000 and just test this. Put it in AGNC, and I guarantee you, within 6 months, you'll have the rest of the money over there. Because you'll be impressed with those dividends. When you look at what the bank is paying you, and you compare it to what I mean, come on, you got to have your head examined. Because I'm telling you, I'm not going to settle for $250 a year when I could get $300, $400 a month. It makes no sense to me. But this guy said, you know what? I'm going to depend upon my wife. She has close to $200,000 in credit. I said, what if she divorces you? What are you going to do? What are you going to do? Huh? What if she said, you know what? I'm tired of carrying around this bum. I'm out of here. What are you going to do? Everything. My wife. I said, dude, come on, man. My wife. I want you guys to get this thing right here. It's called Smart Dividend Investing. This is free. This is a free resource. I downloaded this on dirty paper. The person who wrote this did an excellent job. They more or less talk about some of the same things I talked about. How if you invest in dividend-paying stocks, that your return is much greater than if you invested in growth stocks. I mean, I'm talking about 50% more. Okay? The key is what? The key is make anyone who gets your money, make them pay you for using your money. When you borrow money from the bank, doesn't the bank charge you interest? Yeah, what do you think that's called? They're charging you for using their money. If you invest your money in a stock, the company should pay you for using your money. That's what dividends are all about. It's the reverse. Right? Make them pay you. And some of the companies that will pay, anyone who starts, who say, hey, I want to start my drip account, you should have at least 2 REITs. 2 REITs. I would say AGNC is one. I use a company called CYS is another. They have a 14% dividend yield, annual dividend yield. Okay? And there's one called Annaly, there's one called Penny Mortgage something. Relatively safe. I've evaluated all of them. Solid companies, solid management. And again, with a REIT, they have to pay out 90% of their profits. They can't keep them. If they keep them, you know what's going to happen? The IRS is going to assess what is called an excise tax on excess profits. So they would say, you know what they say? We'd rather give them to our shareholders. Yeah. Because we know if we give them out to the shareholders, what's going to happen? The shareholders get greedy. Don't you know I get greedy? When I get my $325 from AGNC, I want more. The only way I'm going to get more is to do what? Increase my holdings. But I'm not going to be stupid, you know, because there's risks out there. But I know my money is protected 1.30 times. But I still use diversification. That's why I have 18 of them. I have Home Depot, I have Toyota. Let me tell you something about Toyota. We're going to talk about Toyota in January. But you guys take a look at this. You can pass it around. It's online, it's free.
Listen, I'm sorry, I'm going to have to leave.
Okay.
I'm traveling tomorrow.
Not a problem.
I sent you a text, so we'll talk on Monday.
Okay.
Okay?
Okay.
Good
Okay.
night, everyone.
We're not going to take the whole hour. We're going to be done in a few minutes. I want to quickly read this for you. I got this today, and probably give me another 15 minutes. This is from this is one of the organizations I'm associated with, the American Association of Individual Investors. I talked about this earlier. Worry-free retirement. Everybody wants that. Okay. I want you guys to listen to some of this that I hear. That I hear. As this chart shows, 69% of retirees and 77% of pre-retirees are worried their savings and investments will not be able to keep up with inflation. All right, 69% people are concerned about it. And more than half worry that they'll have to completely deplete their nest egg just trying to survive. Okay? People are concerned. But you know what? They're not going to express that concern to you because they don't want to give you the impression they're concerned. All right? But these numbers are just impressive. All right? This is another organization. These numbers are so impressive. But the point is, this whole thing is that you don't have to be concerned that your money is going to outlive you. If you initiate a plan, do you think Mr. Earl has concerns about that? Ronald Reed died and his money survived. All right? $8 million. And anyone can do it. The key is you have to initiate a plan, take banks and insurance companies out of the equation. How many people in here have heard of the rule of 72? Okay. Rule of 72 says what? You take 72 and you divide it by what? Your return, the return that you get. In other words, AGNC has an effective dividend yield of 13.35%. How long do you think it'll take your money to double? The rule of 72 will tell you that. You take 72 and divide it by 13.35%. Less than 6 years. If you invested $10,000 a day in AGNC, and it will continue to pay that effective dividend yield, and in less than 6 years, your money will double without you having to do anything else. All right? Now, I want you to take that, think about it. What is the bank paying you? Let's say 1% for argument's sake. You take 72, divide by 1%. How long will it take your money to double? 72 years. How many people in there? How many people got 72 years? You got 72 years to spare. Okay. I'm a time lord. I'm not going to die. So, Clifton, your argument is wasted on me. I got 72 years. No. Nobody has